Hey guys, what's up? It's me, Jonathan, and welcome back to Money Talks, where we want to offer you financial information and meet you where you are financially so that you can stick to your budget, manage to pay off your debt, and begin to save on your path to building wealth. Today, guys, I want to talk to you about some of the tax changes that are happening for your 401k with the upcoming Biden tax plan proposal. If this is your first time joining me here on the channel, go ahead and hit that subscribe button and you'll be notified every time I upload a new video. So guys, there's so much going on at such a rapid pace because days leading up to the election, you're getting Biden's first 100-day plan. A couple months ago, his tax plan, his new stimulus package, all the different things he wants to do to try to jumpstart his presidency and get the economy moving while managing to keep control of the virus before it spirals into a different scenario, a double back, so to speak. But there are certain things that you should realize that if you have a 401k in your retirement, how his tax changes could affect that, and then what decisions you may make. So currently, it's important that you understand, how does your 401k actually work when it comes to taxes? Well, if you're in the 10% or 12% tax bracket, which is a lower income tax bracket, that means for every $100, you're getting about $10 in credit. So for every $100 that you deposit into your 401k, you're getting about $10 in credit. Biden's proposal is actually a little bit different, where it nearly wants to double that for those tax brackets. Well, we know that there are several different tax brackets. You go from 10, 12, 18, 22, 26, and I think 37 if I remember correctly. And so every tax bracket above the 12%, those who are paying 12% in taxes, that they're usually benefiting because they're putting in more money. Well, Biden's plan is to more streamline and go straight line across the board, about 20.6%. While that's good for those who make who are in a 10 to 12% tax bracket, it decreases the amount of credit that those who are above that tax bracket gets. So what does that mean? Well, simply put, it may make even more sense now to actually put your funds into the Roth 401k rather than traditional. Because mathematically speaking, you're not going to get as much of a credit. So the benefit for you doing a traditional 401k isn't as valuable as it once was, should that go through. Why is that important? Well, the thing about these changes is because you need to know how these tax changes can affect you in your situation. Because when you look at what you're doing, you need to be forward thinking about what's available to you. What if you had a big increase in income and you could no longer put into your Roth IRA, but you did that anyway? Well, you could be subject to penalties because you weren't necessarily paying attention. Just like I want to help you pay attention to your money and your personal finance, your budget, all these different things. It's even more so important that you understand all the different components of your money that you should be paying attention to. And taxes is one of them. I think we've all at one point in time are just intimidated by the fact that you don't really want to get things wrong. You don't want to go off and maybe file something different, take a credit, things of that nature, and then end up owing the federal tax. So this is why we want to discuss some of the changes and how you, in this particular instance, how it can affect really your investing. Because the 401k is where most people start to begin to build their wealth. Obviously, well, what does that mean out there? Well, your employer actually matches to traditional 401k. They cannot match in Roth IRA. But when it comes to the tax planning side, the tax is talking about your contribution. And so when you're in that, again, 18%, every percentile of tax bracket above 12%, it's important that you now reevaluate how much is this credit going to affect me, and what should I do going forward? What vehicles should I be using? You know, there's several different articles that kind of walk through this plan, but this is more of a simplified version, again, so you can understand how you can build your wealth, but what is going to be the best way to do it. And if you're not getting the value about it, remember, this is all about the math. What's going to get you the most bang for your buck? And right now, it seems like, again, even though the Roth 401k is just a good product just because you're allowed to put those dollars in at up to 19.5 in a 401k, and it's all Roth and it's tax free. But now even more so, with the potential decrease, if you're in that higher tax bracket, it may be even more advantageous for you to take advantage of that. I hope you guys enjoyed this video. If you liked it, go ahead and give it a thumbs up. If you haven't already, please subscribe to the channel. And by the way, we will still doing 4 free stocks, up to 4 free stocks when you open up a new account on the platform. Link in the description below. I can't wait to see you guys in the next video.